Let's go around the bell now with Lizzie Metzger, president and founder of Crown Wealth Strategies, and Noah Hammond, CEO of Advisor Shares. Welcome. Good to have you on the show. Lizzie, I'll start with you. What is this action all about here this morning?
Well, clearly we have governments throughout the world getting a little bit nervous about what's happening with China, what's happening with the United States, and they're reacting. And I think actually it's probably a good thing. What we're seeing is defensive actions, and we just don't want to see another global meltdown as we did in 2007. And so these swift reactions from other governments, to me, really signals that I don't really see that we're going to have that kind of economic downturn in the same way that we saw that people are fearing from 2007.
And here we see Dow futures off about 300, implying a drop of about 300 when the opening bell sounds in about 90 seconds from now. Lizzie, your clients, you're in El Paso.
Right.
Your clients, what are they telling you? What is their top concern right now? Is it the trade war?
Right. So the trade war is a top concern. And, you know, we see it in a lot of different places. In El Paso, actually, we see a lot of situations happening with international trade with Mexico. We have a lot of concerns with the immigration and the Border Patrol, and the fact that the cost of goods, the cost of being able to do business is getting more expensive. So you see a lot of concerns with that. You see a lot of concerns with the volatility in the market. We were really expecting volatility to come in. So we knew that it wasn't just going to be a forever perfect market, but we've seen that volatility, and now we're seeing a lot of reactions to it worldwide, obviously.
All right, here we have the opening bell on Wall Street. The Dow opening down 327 points. Disney is leading the decline with a loss there of more than 5% following its disappointing earnings report. JP Morgan Chase, Goldman Sachs, Caterpillar, all lower. Let's talk a little Disney for a moment, Lizzie. Were you surprised? I mean, Disney usually makes investors very happy with their earnings report. They disappointed this time.
Yeah, so, you know, it's interesting, though, because they really are pointed out that they're trying with their new streaming service, they're trying to kind of look in the future and get to a different place. But investors weren't happy. They still disappointed, and it was more of an investment and more of a loss than more of a disappointment than they expected. So I'm not really sure. I think Disney is really making some good moves towards the future here, and they're getting some losses today, but that also may be paired with the losses in the market.
Right, they could be getting wrapped up in that as well. Good point. Again, I just want to come back to the market sell-off here, because right out of the gate, the Dow off nearly 400 points. Every one of the 30 Dow stocks now lower. NASDAQ and S&P 500 each down more than 1%. Is this now, Lizzie, the new norm for Wall Street? Because, look, you got Goldman Sachs coming out yesterday, Noah as well, telling us we don't expect any kind of resolution in this trade war until after the election. And then Morgan Stanley coming out and saying if things get worse on the trade front, they're predicting a recession in 6 to 9 months.
Right, and there's a lot of people that are predicting two or more Fed rate cuts
this year.
Right, and what is that really telling us? Because if you're an investor, if you're in the economy, or if you're in the business market in the economy, and you see these rate cuts, what is it saying about really what the Fed feels about the future of the U.S. economy? And actually, to me, that makes an investor or a business owner a little bit more nervous than if we were holding steady. So the fact that, as we saw internationally, we're seeing rate cuts. The U.S., we had the rate cut, and they're predicting future rate cuts is making a lot of people jittery. I mean, it's making us realize that the future really looks like there's going to be a lot of volatility in it.
Yeah, it's certainly a challenging day ahead. Look at this now. The Dow is down 416 points. The NASDAQ off more than 100. The volatility index, Lizzie, up 15% in just the first 4 minutes of trading. What do you tell clients in a situation like this?
You know, that's an interesting thing that we have with our clients is that if you have runway, right, the reality is we can never time the market. There's no time that we can know what's going to happen tomorrow. Honestly, if we have a trade deal in September, if they come in and there's even signs of a trade deal, this market might turn completely the other direction. So what we talk about with our clients is if you have a long runway and if you have the time for investments, then the best thing to do is to properly diversify those assets and put you in a position, especially with dollar cost averaging, to be able to really get gains over the long term. It's so hard to predict any kind of volatility or what we're going to look like. We do want to also protect against volatility, however. So we have been a little bit more defensive in our positions, in our asset allocations. However, at the end of the day, you know, when you have a 20-year-old investor or a 30-year-old investor, someone coming in for the first time, we just want to put you in proper asset allocation, make sure you have a long runway, dollar cost average you in.
What's a short runway in your mind?
I think 5 years, 10 years even.
Okay,
yeah.
Really? Okay. Yeah, I think volatility, definitely the word of the day here, perhaps the word of the next few months on Wall Street. Noah Hammond and Lizzie Metzger, thanks so much for joining us this morning.
Thank you, Lexi.